The information, opinions, recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice. Hello, everybody. This is Mark with Credit Talk with Justice League of Credit, and today we have a special treat for you. Today we have Joe with Justice Tax here with us, going to talk about taxes, and of course we're going to sprinkle in a little credit stuff in there because credit and taxes go hand in hand. But again, we're going to be mainly talking about taxes. So let's get right to it. And thank you for coming on the show, Joe. And what made you start Justice Tax?
Wow, good question right out of the gate. Well, one, thanks for having me on and kicking off the first podcast for Justice League of Credit. Congratulations. I'm sure you're pretty excited.
Definitely.
Yeah. So definitely I'm going to be talking about very exciting things that everybody wants to hear about: death and taxes, right? I'm sure everybody's raising their hand. Talk to me about death and taxes. But I'm going to throw in some true crime tax cases from some celebrities and some from our very own Justice Tax personal vault. So I guess we're going to be doing Halloween in April, kind of like Christmas in July.
Yeah,
maybe. Right? Yeah, work with me a little, right? Maybe.
Honestly, a lot of people love like true crime type stories or investigation type shows. So I'm one of them. I'm guilty. So I'm all with it.
All right, good. But getting back to why we started Justice Tax, or why I started Justice Tax, it really comes back to a lot of taxpayers need help. And they're really trying to find the right help. And when there's a sea of tax companies of how they should decide, they go to Google, right? They start typing in Google and then they see a name, Cambridge Tax Relief. Well, what's a Cambridge? And how's that going to help me? That doesn't make any sense. Okay, well, they type in a little bit more and they see Anthem Tax. Anthem, like national anthem, they're going to sing me a song to help me out on my tax problem? That doesn't make any sense. How about the largest company, Optima Tax? So I'm very concerned about tax problems, very serious situation. What is an Optima? I don't even know if there's a definition for that word. So that's kind of light and humor. It is kind of true because a lot of people are confused when they go out there. And what I found when I talked to a lot of taxpayers around the world, around the country, and they're stressed, they're hurt, they're worried, they're fearful of losing their rig, they're worried about security clearances, they're worried about wage garnishments and tax liens. And what they come back to is they just want justice. They want justice for their family and they want justice for themselves. And that's how Justice Tax was born.
Perfect.
So on that foundation is the three pillars. And you can go to our website real quick. It's justice for tax, justice for all taxpayers, justice to the IRS, and justice to the tax relief industry as a whole. Those are the three things that I'm fixated on and making sure that we work on that. I talked a little bit about justice for taxpayers, all taxpayers. Okay, a lot of them get thrown to the side because they don't meet certain qualifications. And then secondly, believe it or not, justice to the IRS. I know that's kind of daunting, but I've worked with congressmen here in state of Florida to try to make sure that they are doing the things that they need to do. There's a bill for taxpayers that they're supposed to adhere to that they don't do. So that's something we need to follow up on. And then lastly, justice to the tax relief industry as a whole. There's good companies and then there's bad companies, and we need to work our way out of the bad actors, out of the industry by requiring higher BBB ratings. Everybody should have an A rating at a minimum. They should have certifications of all their employees that they understand taxes, E&O insurance, error and emissions insurance, attorneys on staff, minimum case experiences. The list goes on and on. But by doing that, high tide raises all ships. It raises the right ships to the top and eliminates the bad ones. So that's kind of the foundation of what this is all about, what we're striving for on a much bigger picture. So I hope that helps.
Definitely, it does. So people that are listening and watching this show, they want to know do you help personal, like just regular consumers, or do you help businesses as well?
Yeah, it's a good blend. Since we have attorneys on staff and we've done thousands of cases all across this, from white collar, blue collar, truck drivers, W-2s, 1099, small business owners, big business owners, attorneys. Everybody gets into tax problems. It doesn't matter. It crosses all genres, all types of personalities. It's not exclusive to a limited number of people. And what we do is, since we see so many thousands of cases, we pour all those victories right into your case. And I think that works. So to answer your question, all of them.
Got it. So I'm guilty. I used to be a truck driver myself, so I understand not being able to file, taxes at a certain period of time because you're so busy out there on the road trying to make sure the freight gets to point A to point B. And it's like you so used to doing things yourself, but sometimes you forget about, taking care of your personal finances. And I see a lot of people that have not filed taxes over a certain period of time, and then that's when all the interest, and that's when the IRS started, garnishing things, and I'm like, wow. So that's crazy.
It's a snowball effect, right? It just keeps going, and then once you're in there, it's hard to get out, and it's you think you're finished, but there's such a slow moving machine. And then we'll talk about that it's just, then you're just in there for a long, long time.
Got it. So I want to ask another question. So this is for my customers here at Justice Legal Credit. I want to know, and as well as my customers, how most of my customers have student loan type issues where sometimes the IRS may garnish their wages because they may owe student loans. How does that affect the individual, or can that person, will y'all be able to assist that person?
Yeah, we can assist anybody that has a tax problem. It's just as simple as that. And
okay.
It just depends, and each case is unique. It's because of their job, how long they've been away from the IRS or staying away from the IRS, or how aggressive the IRS has become. It's all different because the IRS is so big. One arm doesn't talk to the other hand, and next thing you know, you're in one department. Meanwhile, you're talking to this other department, and they're not talking to each other, and you think one thing's resolved, and it just keeps going on and on and on.
A big mess.
Yeah, it's a big mess. And now with COVID, with PPP money, with now I think they're doing gas relief money. They did COVID relief money, stimulus checks, tax returns. The IRS is so far behind trying to figure out what to do. And again, one hand's not talking to the other hand. Unfiled tax returns are so far behind. You try to pick up the phone and talk to them, good luck. I mean, I would talk to people all the time. I waited all day. I waited all day to talk to the IRS. They never picked up. That just doesn't make any sense. That's how far back they are. And that's why it's $1 trillion in uncollected back taxes.
Wow, that's a lot of money. Just imagine what a person can do with $1 trillion. Woo.
Yeah, even Elon Musk can't write a check for that.
Oh, Lord.
Elon Close,
Musk.
Close, but not quite.
By another company.
Yeah.
All right, so we are ready for some stories. Let's do
it.
Yes. So what stories do you have to share with us from Justice Tax?
All right, let's do a good one. Let's do a celebrity true tax crime case. Willie Nelson. Okay. Everybody's heard of Willie Nelson. $16.9 million of back taxes. 16.7. But wait till you see how he got out of this mess. And this is the only time the IRS has ever done what they negotiated with him. They've never done it with any other taxpayer ever. Pretty crazy. So wait till the end.
I'm ready.
Oh, okay, you're ready. Okay. Okay, so hopefully people know who Willie Nelson is. Legendary country music star, actor, activist. part of the Outlaws with Johnny Cash, Waylon Jennings, Chris Christopherson. He did that Farm Aid where they were really helping out in 1985, helping out family-owned farmers that were struggling back in the day with mortgages, and the interest rates were out of control. So he did a lot of good stuff. And then he had the famous song, "Mama, Don't Let Your Babies Grow Up to Be Cowboys or Tax Chiefs." Well, maybe the tax chiefs I added, but I think it ends with cowboys. Okay. Yeah, I added a little piece. He may not like that part, but okay. So let's get to the meat of how he got in trouble. Basically, what happened in 1980, real quick. Nobody really cares about taxes, but he invested a bunch of money in a tax shelter. Okay, that's the key thing of this whole topic. Under his financial advisor said, go ahead and put money in the tax shelter. It helped lower his taxes. He paid less to the IRS. Life is good. IRS came back, took a look at it. No, it's illegal. That's when the dominoes started to fall. He freaked out. So listen to this. He only owed $6 million, though that's a lot. $6 million. $10 million on top of that was interest and underpayment penalties. That was more than the debt in and of itself. So $16.7 million. How crazy is that?
That interest, that's how they get you.
That's right. You were talking about that right earlier. So same thing. So he continued to try to get out of the situation. In the end, they just put the hammer down. They said, look, we're going to start liquidating, sell off all your real estate, your recording studio, then it kind of worked its way down to memorabilia, guitars, things like that. And he was freaking out. And in the end, there wasn't enough to pay off the debt because penalties and interest are continuing to accrue, right? So then they created like Farm Aid. They did a fan aid. So all his fans got together to try to help him out of the situation. They kind of had a little concert or something. Yeah. Okay, that didn't work. Okay, still doesn't have enough money. So here's the kicker. Here's the finale to the whole thing. Ready?
I'm ready.
Okay. IRS sits down with Willie and they say, tell you what, you got some talent. You can sing. Make me an album.
Oh, wow.
And I'll let you sell it. And all the proceeds will go towards paying the taxes. And Willie said, okay, I'll do it. And I'm going to call it, guess what he's going to call the album? He called it the IRS Tapes. Who'll buy my memories? And he went on, he recorded it, and the IRS watched it closely, and he paid off his debt.
Wow. And they probably got that little extra on the side.
So how about that? Isn't that crazy? That's a pretty creative idea.
I mean, that's good because for one, instead of just hauling him, straight to jail, they actually worked with him and actually worked out in both parties' favor, because at the end of the day, all IRS care about is money. They just want you to pay. That's it.
Get the money. Get the money. Right.
Wow.
They know how to do that. So it's pretty interesting. So all that was tied to the tax shelter.
Got it. So as listeners and people watching this episode, they are wondering, like, what is a tax shelter? Like, what's a tax shelter?
I know there's like a mystique around this thing now. They think it's something that super wealthy do, and then and I'm not talking about putting money in bank accounts in the Cayman Islands or secret stock purchases or buying islands in the Malaysia or something, or the Indonesia. That is, you're asking for trouble, and that's not what we're talking about. But tax shelters are really a smart way to lower or defer your taxes, and that's done every single day. It's nothing unusual. And people do it every day, and I think they don't even realize it. It's just the name and tax shelter that they try to stay away from. So the number one tax shelter that everybody should probably understand is a 401k. That's it. That is a tax shelter. As simple as it sounds, right? You put money in, maybe your employer puts money in, right? That's a good situation. And then it grows inside of that fund or whatever you have the money in. Let's say you buy nothing but, Twitter. Then it grows, tax deferred, and then when you take the money out of your 401k to retire, that's when they tax you. So that's a great way for it to grow.
So that kind of rolls into because I'm also a licensed life insurance agent as well, and that's basically rolls into the life insurance machine as well. So yeah, I get it.
Yeah, pension plans, bonds, mutual funds, all those are tax shelters as well under that same umbrella.
Yep.
Right. Another tax shelter is buying a home compared to a renter who doesn't get anything. You buy a home, everybody knows you can write off property taxes, mortgage interest, and ultimately the repairs. Everything helps to kind of work your way down to paying less taxes. You use that as a shelter, right?
Definitely.
Tax
And
shelter is almost a physical home. It's when people start getting crazy with that and they start doing some things they shouldn't be doing.
right. And I know my listeners that are, because most of my customers are new home buyers, and they're definitely loving this right now. Like well, I ain't gonna say discount, but saving money, tax deferred. Oh yeah, that's right up the alley.
That's right. Well, then if these are new home buyers, then they're probably recently married and now they're having kids. Well, then that kind of rolls into the other tax shelter, which is that, prepaid college, that 529 plans.
Yes.
Oh man, that's like a gold mine. Why? It's a no-brainer.
Mhm.
Why? Because you're allowed to put money in there for education, and the federal government doesn't tax you in any way, shape, or form. So it grows completely tax-free in a tax shelter, again, that term, tax shelter. And it's as long as you then apply it towards the children's education, right? It has to be specific for that vehicle. It can't start going in different directions and taking the cash. So
Yep.
that's simple, no-brainer. In fact, there's one state, Pennsylvania, that does a tax credit on top of that. So not only are you saving money here, they're going to give you a credit to apply towards your other income that, let's say you have a W-2 job, you're going to pay
Mhm.
taxes on that income, right? You can apply this tax credit in Pennsylvania towards that potential tax. You can lower your tax bill over there. It's crazy. It's great.
Wow.
So, last thing, starting a business. Maybe you're familiar with starting businesses.
Oh, definitely.
Yes.
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 That kind of works into credit, business credit, and yes, definitely.
So that's another tax shelter. If you can deduct your car, your home, employee expenses if you do it correctly, right? If you really are
Yeah.
using your home, if you really are using your car for the business, then you can use that as a tax deduction.
Got it. So, and this leads to my next question. We talked about, the IRS, all they want is money. Does the IRS commit crimes? And I wonder because, well, can you clarify, is the IRS not 100% good? I'm gonna put it to you that way. Yeah, that's the best way I can clarify that.
Well, I don't know if this office is bugged or anything. I don't know. But, do they commit crimes? Definition of crime is, they do something unlawful. And you have to wonder why the IRS adopted the Taxpayer Bill of Rights in 2014. And I'm just going to read what it says. That gives the taxpayers a voice to protect themselves when the IRS breaks the rules. Well, if they put that in place, well, what are they saying? IRS must be breaking the rules. So there is a Taxpayer Bill of Rights that you can stand by to protect yourself against the IRS. So, it's a lot like the Bill of Rights that we have now. You have the right to be informed with regards to the IRS. You have the right to quality service. You have the right to pay no more than the correct amount. You have the right to challenge the IRS. You have the right to appeal a decision. You have a right to finality. And you were talking about time dealing with the IRS. You have a right to end this thing. It can't be forever. Just because the IRS has unlimited funds doesn't mean that gives them the right to drag this out for 5, 10, 20 years, right? You want finality to the situation. And then finally, confidentiality, right to retain representation, and then finally, a fair and just tax system. And really, I think a fair and just tax system should be first. There should be a fair and just tax system. That should go without saying, don't you think? It should be fair for everybody. It should be just for everyone.
And that kind of roll into credit, because the credit bureaus, same thing. They're not 100% fair to the consumers. So that's where Justice Legal Credit come in to fight for the consumer's behalf on the credit side. So taxes, everything works hand in hand. So, and the federal government actually have certain rules in place for consumers to hold the credit bureaus and debt collectors accountable for taking advantage of them. So and one of them is called the Consumer Financial Protection Bureau. So any listeners that is listening, just do research, and you'll be able to find out more information, or you can give us a call here at Justice Legal Credit at 904-339-8051. Joe, how can listeners reach you or your team?
The best way is through the website, justice.tax.
Got it.
How short is that? How sweet is that?
Right.
Right to the point, justice.tax. Yeah, that's probably the best way to do it.
Got it. Have any more stories out the vault that you can share with us?
Well, yeah, there's we have a story from the Justice Tax Vault, which we do thousands of cases, and pulled one out here that I called how the wheels of justice finally prevailed, is what I coined this one. And it was a really interesting story of it's amazing to hear the stories that we get on the servicing department, and how the IRS can break somebody or almost break their spirit. And fortunately, we're able to get in between them and the IRS and be able to step up and have be able to swing the bat on their behalf, to be able to, or tip the scales of justice a little bit, I think would be a better way to say it. But a quick example was one of our clients moved his wife and 3 kids from North Carolina to Oklahoma, and to pursue a better life for the family. The youngest daughter was severely disabled, and this increased pay was going to help them to kind of take care of the medical bills. So they always filed their federal and state. Different states have taxes, different don't. I'm in Florida. We're in Florida. No state tax.
Yes, exactly.
Right. So North Carolina does. So they always filed their federal and their state returns on time. And because of the tax credits that they could get, the child tax credits, they got big returns. They use those returns every year to support the family and to take care of the mounting medical bills for the one daughter. So one day they receive a letter from the IRS to say, yeah, not happening. Nope. The refunds now are being redirected to the North Carolina to offset tax problems with the North Carolina. I didn't know that North Carolina could negotiate a deal with the federal government to redirect, a taxpayer's money from the federal government to a state agency, which is, I guess perfectly legal, but unbeknownst to the client. Okay. So this continued on. So they're taking huge chunks of these refunds. The North Carolina is through the IRS. This went on for 5 years. We talked about finality here. This is going on for 5. Can you imagine the devastation of $40,000 in debts, penalties, and interest that was taken by North Carolina from this client? How wiped out and devastated do you think they were during that 5 years?
I'm pretty sure they were not happy campers.
They had a really difficult time surviving and being able to take care of the daughter, along with just surviving as a family. So they contact North Carolina, they do their due diligence, they communicate with them, they communicate with the IRS, explaining to them, we don't live there, we left 5 years ago, they constantly, nothing, no response. They reach out to us, explain the situation. We take a deep dive analysis into their situation, and we were able to determine what happened was they didn't change their driver's license immediately after going to Oklahoma.
Wow.
So North Carolina assumed they were still living in there. They've been trying to get a hold of them. I think it'd be an easy solution. But of course, the IRS is too big to solve this problem that's too small for them. So they just filed the returns automatically on their behalf, which then led to a tax problem, led to automatically to a tax debt. They quickly called the federal government to get the money. See how it all happened? So then we quickly challenged the manager at North Carolina, explained to them what happened, proved to them that they did not live in North Carolina for 5 years. They lived in Oklahoma. He worked in Oklahoma. They had a place in Oklahoma. And finally, in turn, the state dropped the penalties, interest, tax debt. And the best part is they refunded the $27,000 of the actual money that was owed. And then they were able to use that money to finally put a down payment on a house and build the wheelchair ramp for the daughter.
That's good.
Case closed.
That's good. And this is the reason why people need your assistance, because a lot of people in that situation would have just given up. I mean, I know I probably would have, but because you and your team was there to assist that family actually has a good, successful outcome. So I appreciate you and your team for doing that for that family.
Yeah. How about one last story?
Oh yeah.
Okay.
Definitely. Ready.
I don't know how you're doing on time. So
Good.
okay. All right. So another client, elderly Vietnam veteran, fully disabled, had a construction company that when he got ill, slowly fell apart, couldn't keep his employees going, had to ultimately shut down the business, but he was obligated with $100,000 in payroll taxes that he understood he owed. So the IRS revenue officer, didn't waste any time, levied his only source of income, which was Social Security disability. Guess how much the IRS can levy when it comes to Social Security disability? Up to how much? What percentage do you think they can do? 10%, 15%?
I would probably say more than 50%, probably.
Yeah, 50%. Half of what you take in as a disabled veteran, they can take 50%. Now, how long do you think he can survive with half?
Not long.
Not long, right? So he's scrambling for food. He's borrowing, begging from his family to survive. In the middle of all this, he talks to the officer and explains the situation. They quickly do a financial to show that he can't afford, 2 pennies to rub together. So the revenue officer says, okay, I agree. I'm going to put you in currently not collectible status. That means no payment is required. That's a good thing. That's what we would shoot for. Okay, so all right, all thumbs up, file closed, right? And of course, he's going to lift the levy, the Social Security, right? He's going to release the 50,000, 50%. Sorry, 50%, right?
Right.
No,
but
incorrect. So unfortunately, there's an oversight, and they don't release the 50%. So he, of course, contacts the revenue officer and says, hey, you forgot to lift the 50%. I'm still being hit. 50% of my Social Security is being hit, right? You agreed. You said everything was good. He goes, I don't see anything. It is released. It is released. He goes, no, it's not. I know it's not. I'm getting half my check in my bank account. I'm feeling it every day. 5 years later, remember we talked about this finality thing. 5 years later, they continue to levy him. He's at his wit's end. He doesn't know what to do. He's in poor health. He's financially ruined. He makes one last attempt to contact us as a last ditch effort. And our team goes to work. Our strategy was to pour over the hundreds of pages of IRS transcripts that he has all the way back to the beginning, from before this happened to when it happened to afterwards, so we could really map out the whole thing and see where it all happened, how it all fell apart. And there we pinpointed precisely where the 50% Social Security levy was placed. We then contact that exact federal agent and showed him the exact location, the IRS code, and then the exact steps to remove the 50% Social Security levy. So we showed him exactly, okay, this is how you do it exactly by code. Everybody worked focused just on that piece. And the results were, he didn't have to beg anymore from his family and his friends. And he could finally, hold his head up high, and the case was closed. He got his, yep. So that was a good one.
That was definitely a good one. And again, I don't know what people would do without you and your team, because again, just listening to those stories, honestly, I wouldn't have made it. I'll be honest with you, 5 years, and my money is being held up by the IRS because of a miscommunication. Oh man,
That's crazy. I mean, sadly, he passed away last month from cancer, but at least he had a few good years of worry-free from the IRS, the
Yeah.
finality of the IRS, like we talked about. And then he was able to kind of have peace of mind and live his last few years, the way he wanted to, as a veteran, to do what he wanted to do. So that was good. It was good for the team.
My condolences to that gentleman.
Thank you.
So, and that actually leads me to my next question is, when a person passes, does the IRS still come after that person?
What do you think?
Of course, because they want money.
Yeah, death and taxes, right? I thought we were talking about
they just won't stop.
Yeah, I did some research on George Carlin. I thought he was a fantastic comedian. He had 20-year battle with the IRS, owed millions of dollars because of drugs, rock and roll, financial issues, mismanagement, probably some mismanagement, tax shelters, the usual. And then he worked, until he died. And then the question is, after he died, did he still owe? Could he lap his way out of owing the IRS from the grave? And the answer is no. What they do is they quickly go to your estate, right? So you're dead, but they look at your estate and then they liquidate. They get to head of the line and say, okay, pay up what you owe. So after you do that, and if you still owe, then they continue to figure out ways to get the money. They leave the case open for hopes of being able to get money, like in different community property states. This is getting too much into the weeds, but like California's community property state. So if you're married, then you can get money they can try to get money from the spouse. So yeah, when you die, it's still around. The tax doesn't die with you.
That's crazy. IRS, they just won't stop.
Yeah, they're relentless. There's thousands and thousands and thousands of tax code, one on top of the other, that we have to read.
That's a lot. But again, I'm just glad that you and your team are here to help guide these people along the right path and help them get them out of crazy situations like that. I mean, I understand it's case by case, basis, but again, everybody that's listening to this show is definitely, if you're listening to this show, please call Justice Tax immediately if you need it, please.
Yeah, I mean, you must have the same stories. Yeah, thank you. I appreciate that. You must have the exact same, very similar stories, because you're dealing with a lot of emotional issues. People have credit.
Oh yes.
Shouldn't be on their credit, whether it's Equifax or whatever it might be, and then they can't get the house that they want. They can't buy the things, or maybe it affects their getting married because they don't want to go into a relationship with somebody who's got this really bad credit.
Yeah, because most situations that I run into the most is, like, as of right now, because of COVID, a lot of people finances is not as great, so the debt collectors are taking advantage of the consumers. By law, they're supposed to be helping these people by helping them put on like payment plans, and some of them don't. So that's where me and my team come in and help assist those customers to guide them on the right path and help them increase their credit score, with the help, of course, the customer themselves, because it's a team, a partnership technically. So the customer has to do their part and our team do our part. So it's not just us doing everything.
That's good. Man, you're doing a very noble cause here to help people out of a difficult situation, and they don't know where to turn, and you have all the expertise, so they can rely on you. They know that they're going to get it done right.
Definitely. And one thing that I noticed between our companies is that we're basically there for the consumer. That's who we fight for, is the consumer. So, all we want is what's best for that consumer. And there's nothing else I can say about it, honestly.
Justice for all taxpayers. That's what we talk about every single day. And is that what we're doing? When we talk about it, hey, you brought justice to that taxpayer. Good job. And that's what the team rallies around.
Got it. So Joe, I know all the listeners are listening in on this show. And is Justice Tax on any social media platforms that they can follow you?
Yeah, we're on everything you can imagine. Facebook, Twitter. I don't know if we got to Pinterest. Would we want to be on that to show pictures? Probably not. But
What about
uh,
TikTok?
oh, I don't know. We're debating on that. Is that a good vehicle to try to get out there and
Yes.
show?
Yes, me and my team, we are on TikTok and we are experimenting with TikTok, but TikTok is definitely a good platform to have fun and to, of course, share tax advice. Well, but share, information.
Right. Okay.
Yes,
Yeah, we've been talking about
highly
it.
recommended. Highly recommended.
All right, good. I'll do it. Well,
Got
good.
it.
Well, this has been a great podcast. Any last parting words I would say for anybody out there about taxes is because we get a lot of people come to us or talk to me, and I just tell them, look, just file your taxes, file your tax returns, file your
Yes.
taxes, because but then they say, yeah, but what if I owe? Well, it's not against the law to owe money to the IRS, okay? But it is against the law to not file your returns, okay? So just file your returns and we'll deal with the rest. Not filing your returns just gets you in a world of trouble.
Appreciate that, Joe. All right, everybody, we shared a lot of information, so I hope everybody took notes, and we have lots more information coming down the line. So please like, share, and subscribe and follow us. We are on all major platforms. And please, if anybody that want to know more information about your taxes, give Justice Tax a call. And if anyone needs services or questions about credit, y'all can give me and my team a call at 904-339-8051. All right. Well, appreciate it, Joe. Thank you for stopping by with Credit Talk with Justice Legal Credit, and we are out. The information, opinions, recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice.